All right, looks like we're on. Fix these windows for a second. All right, guys. Should be an interesting rate decision with oil prices and everything going on in the Middle East. I'm interested to see if Powell has a dovish or a hawkish tone after in the presser. Should be kind of sad, honestly. It's Powell's last since I started full time trading. Powell's been the Fed chair, so this has been my ritual. Is watching this man speak, and now he's gonna be gone. So mixed feelings. I feel like I'm getting old. I feel like I've been trading a lot longer than I feel like I have, but it's cool. It's cool. I might get a couple other traders to hop up on here with me and discuss what's going on. So bear with me if I'm looking at my phone a little bit. It's just because I'm going back and forth with some of the guys that might pop on. And then we'll get them set up on the mic. It's gonna share this link too across all social medias. I don't even want to talk about how bad I'm getting screwed on my Bitcoin long right now. I went to bed, I was up 3,000. I woke up, I was down 4. Not a fun swing, but whatever. Okay, got the links sent out everywhere. So we should be good to go. Okay. Gonna get the chat up too. Okay. Should be good now. Good to go. Camera's having a hard time focusing today. Should be okay. Interesting part isn't me anyway. It's going to be this price action. Let's take a look at SPY. Is anybody even in here yet? Oh my god, we got one person in here. And I think that might be me. So I might just be talking to myself. So that's cool. Very fun. See if we can get a few more people in here. If you are watching the live on Twitter then or X or whatever, reply to my post or just tweet at me. That way I know that I'm good to get started because I don't want to start and talk for nobody. Gonna have to figure out how to get the YouTube live chat on my screen too. Let's take a look at Meta and Google and a couple of these other companies that are reporting after hours today too. Oh, did the rate decision come in? Rates unchanged. Big surprise. Big surprise. So now we got about 30 minutes before the presser, as usual. Nothing too crazy here. BTC got a little bounce. Nothing too crazy. I'm gonna see if I can at least put a poll in the chat here. I want to see what you guys think. Do you think we're gonna be hawkish or dovish for Powell's last presser here? Okay, I posted in the chat there. Let me know what you think. I'm gonna lean on hawkish. I think he'll lead with some, or he'll end with some kind of words of that are encouraging for the markets longer term. But I feel like it, at least if he sticks to his guns, he's gonna just tell everybody like, listen, this is not gonna be easy on the dollar. It's not gonna be easy on inflation. Oil prices are putting a strain on the economy right now. Jobs market is still continuing to be tough, and yeah, like that's I just don't see how he kind of wiggles around that unless there's some data that we don't know. But We'll see. We got about 25 minutes until we can find out. See what the rest of Twitter's saying right now. Damn, there was 4 dissents on the reserves pause today. So 4 people didn't agree with that decision. There's a lot of pressure from up top to be cutting rates still, even in this environment, because it just looks better on them. But yeah, actually, let's take a look at crude right now. We have been rocketing. We bottomed out. Was this the 20? I don't know, the 17th. So for the last 12 days, we've been on an uptrend, which could culminate in a small local top here today. But I'm leaning towards this continuing upwards. Trend is still bullish. It's a clear V-shaped recovery here. Volume is still good. I think if crude oil can break above 110, we're gonna make new highs for sure. Honestly, if it can hold above like 106, then we should see another push because there's a lot of sell candles here in that area. Dollar's up a little bit today. What are the 4 that are reporting after hours today? Meta, Google, Microsoft. Is it Amazon? Amazon the other one? Yeah, Amazon, Google, Meta, Microsoft today. Let's take a look at all 4 of these right now, see how they're reacting to this. I feel like this is pretty baked in, pretty priced in already, so I wouldn't expect it to any huge moves to happen just yet. Might take a look at put and call premium right now and see what we're looking at on the net premiums. I feel like Google, Microsoft smash earnings because they've been selling all these cloud service, like they've been selling all these AI services. People have been spending shit tons of money on them. So Microsoft and Meta, I feel like there's a lot of upside there, and there could have projections to make even more money in the next year or the next quarter with all the services they've been selling. As far as their new AI segments, I just don't see how. I mean, Microsoft has had what, a 3-week bounce here after a really long sell-off, pretty much since October. Lost this whole move on Microsoft, like all the way from 350 or what was this, 340, went all the way up to a peak of around 550, then sold off all the way back down to 350, and now we're back at 420. So I think that this trend should change. You can see here the MACD on the weekly just turned green, and Microsoft's no stranger to a bunch of green weeks in a row. So I could see this continuing to go up. Maybe a small pullback towards 400, maybe into this zone again, and see something like this. Where's my path? Something like this. Or we could just have a breakout on earnings, shoot up here, and then continue up that way. But my guess is honestly this. Like I feel like 460 after earnings wouldn't surprise me at all. I'm gonna take a look at Google too. I mean, Google's just nonstop. I mean, Google's been really benefiting with Gemini and stuff like that from this AI craze. I mean, it had this slight pullback into 130, 140 area. Now it's back towards 350. Um, just all this AI compute demand is just crazy. So I don't see this stopping for Google. I could see 400 post earnings, no problem. BTC, if we're looking on the weekly here, we're holding up above, actually kind of just below now the 0.236. Jesus, dude. Bitcoin, yeah, it might give up 75 here. I might have to close out my position. I'm down like 9K right now. Son of a bitch. I didn't even see this. Canada moves to ban crypto ATMs in major crackdown. Canadian government plans to prohibit crypto ATMs, labeling them as a key tool for scams and illicit money flows. With the world's highest crypto ATM density per capita, the crackdown impacts nearly 4,000. There's like five. Like I obviously I'm Canadian. I live in Canada. There's several convenience stores near me that have these ATMs. So I've never once used one, but yeah, it's like this guy said. There's an ATM within 15 minutes radius of my car. There's like one for 5 minutes for me. No way in hell I'm putting my ID, bank card, and the paying fee 10% to use it. Like imagine paying a 10% fee to send Bitcoin. The whole point is that you're getting faster, lower fee transactions with crypto. That's why people opt to use other coins. But I mean, Bank of Canada's rate decision was uh, the bellwether, right, for where rates were going to be. Now we're looking at it continuing. They held and U.S. is holding, so no big surprise. No big surprise there. I wonder if that's gonna get a crazy bounce once everything opens up. Huh. Meta launches crypto stablecoin payouts for creators. Damn, so Central Command's planning another strike against Iran. Got about 15 minutes before the presser. You okay, Cosimo? I always find that this story is so funny to me. Japanese soldier hid for 29 years after World War II. Well, well, well. We're gonna have to see what's gonna happen here. Bitcoin, I mean, look at this volume that came in there in the last 15-minute candle. Huge. Huge.
They basically move sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services. But we're not seeing progress there. So we do, what we expect for next year is continued. What we want to see for this year, rather, is continued progress on housing services. Finally seeing that the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see, but it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and, in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can we're at 3.0% core. Inflation 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time. And that's a concern. We need to get back down to 2%. And we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality, and I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think a good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for
just
what
the job
we
market
think
is
our staff thinks is
in the toilet right now
overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but you know, I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So you know, we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and so and you know, are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks, and so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing and a very much more difficult thing because it does immediately raise the question of tension between the two parts
This
of our
chat
mandate.
is
But, it
ridiculous.
has
I don't know
world
if you guys
changed. I
can
mean,
really see the chat on my
COVID is
screen.
a one-time thing, right?
Here. It's just
This
people
energy
writing
supply
sell,
shock
buy,
is a
buy,
one-time
buy,
thing.
sell,
It's
sell,
not-
sell.
It's not because of some
Buy
broad
some
tendency
piece of
or
shit
anything, I don't
coin.
think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And, I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Mike McKee.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy that the possibility rather that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business service as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of where inflation
It's
remains
literally
high.
all
It really
degenerate
doesn't
day
seem
traders in
that
this
most
chat
members are penciling in a
watching this.
slowdown in
So
growth.
crazy.
No.
But has there been any discussion of the risks of stagflation?
Are we the
at this
only
point?
people that actually give a shit about
People
this?
actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. Sorry, and your second question was just
If there have been any discussions about the risk of stagflation, stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. When we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth.
Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that. I
When
don't
we're
know.
thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean because we see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast,
now
activity
we're
in the
live.
housing sector has remained weak.
What is going on?
In the
Okay.
labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long
This is
reflected
sad.
a shared commitment to finding common ground in service
end
to
of
our
an era.
mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside
Say what you
so
want
many
about the
great
guy, but
public servants at the Board of Governors and around the Federal Reserve System.
he had probably one of the
Fed's work
toughest
is only as effective as the public's
concerns at
understanding
Fed
of it,
chair
and you,
between
the
COVID
press,
and
are essential to
all
keeping
this.
the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
kept it classy.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never
wonder who did
suggested
that.
that such verbal criticism is a problem, and neither has anyone else here.
Who would be
But
verbally
these legal actions
criticizing
by the
Jerome
administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was there?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have, I think, left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert, and monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs.
Hasn't even
before
peaked
we
yet.
even thought
Powell's saying to go long oil.
about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate, and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut, that number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, it's a much closer thing on the committee than it was in March, and that makes all the sense in the world. It seems to me.
6-7.
Claire.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools? So
I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
What does he mean by that?
Hi, Chair.
Chair
Powell,
Neil
from Axios.
This kind of
Can you tell us
format
if you've
will
been
continue
in
on
touch
these
with
CPI days?
incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was, we were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
There's so many comments in this chat saying to sell gold, sell oil, sell BTC.
I wasn't thinking of it as such, but no, not
Fear
really.
mongering going
I'm
crazy
thinking
in
more
this
of
chat.
The other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market? And should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many, many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out, and it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world that had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that experienced. So I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates, and for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
Bitcoin bouncing a little bit.
Issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and
Spy
transparency.
bouncing too.
And I'm waiting for that, and I will leave when I think it's appropriate to do so.
They're asking him about leaving so much. Imagine he is actually
Michael McKee
doing
from
this
Bloomberg
to
Television
keep a
and Radio.
majority
I'd like to
against
ask you
Trump.
if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down
Everyone's
fast
saying to
enough.
sell gold. I think I'm about to buy it.
Is there any
Like,
sense that interest
doesn't
rates
look bad
might
here
have
at
to go up, or was
4,500?
this just a setup to sort of
I might actually long
warn
gold.
people that you're worried about the war impacts?
So
Long and
nobody-
gold here doesn't look that
the
bad.
three
The
dissenters
more I
and-
see this
and
whole
others
chat
who
saying to
could have
sell gold, the
supported
more I
that,
want to buy more.
and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you don't want to make them.
A little bit of a
You want
bounce
to make
here
them
on
in a
SPY.
way that will be sustained and continue to make sense, and not
Bitcoin
something you need
trying
to take
to.
back, fairly quickly. So I think a group of us, including me, didn't feel like we needed to be in a hurry on that markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument, too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got three dissents
Really
in
political
favor
answers
of
today.
two-sided warning.
As always, he's
you've got
always
yourself staying on the board. You've got the
pretty classy in
criticism
that way.
does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy.
How many
is
times
gonna
does he have
get
to
made
answer
by,
why he's staying?
19
Like,
people.
it's clear. Trump opened an
There's a lot of
investigation
stability
against
there.
him. And I was wondering
if you
why
think about
he's
it,
staying on as governor.
Every new
Like,
fair
this is
Fed
part of the
chair
deal.
has
This is part of
same
the process.
situation, which is you've got
These guys all want to make
18
it a political
colleagues on the
issue. I think
FOMC,
that if anyone's
11
made
of
it a
them vote
political
during
issue,
a
it's
year,
Trump himself.
And you have to, your job is to create consensus, it's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's
He's so composed.
That's
Like
what every
that's-
Fed chair
at-
has to do. And I
some
think
point I'd
Kevin
get
Warsh is
so
actually
pissed off.
quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Howard.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can. Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do. The shadow chair thing. No, I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, there were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, and they're real, and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable, because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know until we know. So fortunately, we're in a good place to wait and let things develop.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with SEPs. Can you talk about why you see that as a net positive?
So we always said, when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting and sometimes between meetings, and doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to I try to deliver a message on behalf of the committee, rather than 18 other people going out and delivering their message, and it's going to be all over the place, because we do thankfully have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented action, any action on those changes?
So, yeah, I'm not going to go into the real small specifics, but what we found very quickly was that making changes, making really large changes, for example, to the dot plot or the SEP, it didn't have, we couldn't come up with anything that had really broad support on the committee, and so we just moved on. We didn't really do as much on that as we might have. And you know, I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And you know, we've looked at a bunch of things, and you know, it's something, like I said, I think every new chair is going to look at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast. And that's because we have a 19-person committee, and you know, you try to do that at the board, that's hard. At the committee, that's hard.
Made back
it's hard if you do it at
$1,500.
staff. So it works. I think our communications are fine.
I'll take it.
But looking at doing it in a different and better
That
way is the
15-minute
most
candle
natural
really
thing in the world.
fucked me. I'm not gonna lie.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
You know, where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now. So it really is going to depend on how things evolve, and you know, that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You know, you just have to find that out empirically. You know, given our the fact that we're, you know, a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s. You know, the effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. The effects we're feeling in the current situation currently, and in sort of what's priced in, which is you know, a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. And those hikes may continue to happen. And other things are going to start to reflect airline fares I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut.
Mm-hmm.
For policy looking, you know, meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen 4 dissents now since October of 1992, are you handing off a divided Fed?
You know, the thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good, and we're in an unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic. We had the invasion of Ukraine. We had.
Let me know if
terrorists,
it's loud
and now
enough,
we have,
by the way.
Iran and the oil.
I think we should. It should be
So
closing in on the end of this now.
Every supply shock has the capability of driving inflation up and unemployment up. And what do? You know, it's the central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those 2 goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. You know, people are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. And I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
And the message it sends to President Trump by staying on?
I'll stand on what I said earlier.
Yeah, like how many times are they going to ask him the exact same question?
Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed?
Like, all of these questions are insinuating the same thing. They're all trying to get at the same thing about him staying on governor. I just don't understand. Like, we should be. There's a lot of other big things going on right now, especially with
so far to defend it, but. You know, the law does create
I swear,
a setting.
Everything has to be so politicized nowadays. Like, it's just like, this is an important. The monetary policy is what we are basing these
political factors.
Capital markets off of. We need to be
part of it is
talking about that, and that specifically. This is just noise. The drama around this,
the Fed and the administration between the Fed
has gotten to be too much. I'm almost excited for Kevin Warsh to be on, because hopefully maybe there's going to be a little bit less of this. I feel like the last 6 months to a year of Powell's
some of it is legal.
Being on here has just honestly made it so
it's more than just monetary
so
policy.
tedious to listen to these.
We don't want to use our tools to. We haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks, yeah, it would be good to repurpose those to serve other purposes, but that gets dragged. That's dragging us into politics and into fiscal policy. So we've resisted that.
Well, and maybe another way of asking it, too, is do you think that Fed independence is as strong now as when you became chair? And if so, why?
Look, I think it's at risk.
I'm about to shut this off at this point. This is kind of pissing me off.
These legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about. And we've had to do that, and we've been successful so far, but that's not over. None of that is concluded yet. And it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it, and I'd like to think that we can get out of that era and go back to respecting, what the law says and what custom has been, which is to, let the Fed do our thing.
Big surprise, Trump doesn't respect the law.
It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about?
So I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all I'll say. And and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris Waller is particularly passionate about that. Of course, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing he touched on was the idea of removing reserve bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine. Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy.
The integrity of the
when
Fed.
The history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say that that's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them
such a funny
really
way
since the COVID reopening?
We're committed
to
bring
put inflation on timeout
back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting, these events keep happening, which keep driving up costs, and, you know, the best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that, but we try to get there over time in a way that does the least damage possible, and, you know, our commitment to that is never-ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, you know, growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of a momentum in the economy, is actually higher than that. So that's, you know, that's a positive thing. If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's, you know, in a sense, the labor market is in balance. But it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good. You know, inflation is the thing we need to work on.
So that's pretty good.
And it's partly tariffs, which we think that inflation should subside.
There's no
over the
new
course of
jobs
this
at
year,
all,
because it's kind of a
the
one-time
GDP
increase. It
growth
shouldn't
is
be
just due
repeated.
to
And
massive
that should start happening pretty
adoption of
soon.
data centers
The
being built
energy
everywhere, but, you know, like,
inflation
things
that
aren't
we're
that
getting
bad.
should go through.
You can't really get a
fairly
job unless somebody
quickly.
quits or gets fired. But
And we'll just have to see how that
things
works
are
out. In
good.
the meantime,
Numbers look good
you know,
on
we think our
paper.
policy stance is in a good place.
I'm
for
sure
us to
that's not
hold
affecting
and
the
wait
regular
developments.
U.S. citizen or
Thank you, Chair
U.S.
Powell.
family,
Jennifer Schonberger with Yahoo
middle-class
Finance.
family at all.
At the
I'm
risk
sure
of
that's
beating the
completely
dead
fine.
horse here,
I'm sure that's great for new
three
graduates.
members objected to keeping that easing bias in the statement, and you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that, you know, the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think, you know, there's a lot of signaling going on when you change guidance like that, and so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because, you know, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it. And of course, we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But there was a difference over whether to do it at this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And you just said moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, you know, a high-profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. You've made many tough decisions in your time at the Fed. And as your time as chair comes to a close, and you think about your tenure and perhaps your legacy, are there any decisions that stand out as ones that you're particularly proud of? And are there any that, with the benefit of hindsight, you would take a mulligan on?
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, we, all of us together, have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. It's been very challenging because we've been in a situation of supply shocks really for 6 years. And
since COVID,
it's just a very different situation than for a very long time.
You should be proud of that.
The Fed and other central banks were doing all
actually
the time
keeping
was
it together through a worldwide pandemic.
And there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And
now
by the
with
way,
this situation
central
in the
banks
Middle
that
East,
have
I feel like he's just had
an
a lot
inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging.
Not exactly a
and
steady environment.
We've tried to do our very best
for economic policy.
These really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after literally centuries of experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic, inflation everywhere in the world, and now we have inflation that had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the tariff shock as well. So, but what I would say to the general public is that's the backstory, is that don't think about it, an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore political considerations, completely ignore them.
If people can understand why the Fed needs to be completely independent of any of the politicians, I don't understand
doing these things.
Like, they'll lose all integrity.
I want to do this because the president
people will
says
stop
it's a good
investing in
idea,
U.S.
because there's
bonds.
an
People will
election
stop
coming up,
investing
and I want-
in the
I
U.S.
want
in
to speed up
general.
or slow down
The
the
numbers
economy.
will just be
think about that. If that's
completely
what we were doing,
propped up, and
we'd have no
inflation will
credibility. Markets would
skyrocket.
lose faith in us.
If Trump had it
and
how
our
he
ability
wanted,
to control
things would
inflation,
look good for the next 3
and
years
having
while he's in
respect would
office, and then we'd all be
would gone.
fucked.
And let me say,
after.
whatever people
So-
say, the markets believe in that we will produce 2% inflation. If you look at longer run expectations, markets believe that
There's just no, there's really,
sense in
like,
which
I don't even
our
understand how it's
credibility in
even
the markets has
a
weakened.
discussion as to
It's
why
just
that
not
the Fed
case.
needs to be
It's-
completely independent.
People do get it, that this is our commitment and that we will achieve it. And it's
Only because
priced
this
in.
fucking clown
If you
is in
disagree
office, we
with
have
that,
to,
then you can
like,
go
we have
ahead
people
and bet
questioning
against the
whether
markets. But the
these
markets
guys
are
should be
pricing
making the
in
decisions.
Fed credibility.
It's worked. It's going to continue working. It will not work if these elected politicians are going to have
Thank you,
any
Chair
say
Powell. Richard
in
Escobedo with
economic
CBS News.
policy.
We
Point
talked a lot
blank.
about gasoline
It just
prices
will
and
not
even,
work.
you mentioned
U.S.
airline ticket
dollar will
prices,
dive.
both of which are up dramatically.
The
because
bonds
of
will
the
go
war in
way up.
Iran.
Everything
And so
will
I
be
wonder, Are you seeing
destroyed.
that weigh down consumer spending in other parts of the economy?
U.S. will
And
lose
if so, how worried are you that that will
its
be a drag on
reserve
growth?
dollar
You don't see
status.
spending
It will.
yet, you really don't.
It'll
I
be.
mean,
It'll mark the
as
end
one
of
your
the
colleagues
U.S.
said,
empire.
The economy has
if
been resilient. It really
the
has.
Fed loses
Not just
independence.
this time, but it's been remarkably resilient for some years now. The U.S. economy has just
And that's not even
powered
an
through shock
exaggeration.
after
It's
shock.
just it
And
literally
consumers are still
will
spending,
mark
and
the
that's
end.
what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently. people are still spending. And, how long can that go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now, we don't actually see much slowdown yet, certainly none from this. But you think logically you will, because people have a certain amount of money to spend. If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models.
Anybody
that
watching
we
now, what do
use
you
to
think
calculate
about
inflation? So they're,
Fed
they're just
independence?
parts.
What do you think
can
about
ask
the next
anything
Fed
like that,
chair?
and they have a place.
If
the
Trump's
staff
going to
has
have
a place
any
where they're looking
influence
at that
on
and
him
pricing in
as far as
what will
making
happen with higher
economic
prices and that
policy
kind of
going
thing.
on
So
into
it's
his
there.
term?
The effects are not that big yet. We're a huge economy.
Look at SPY
The
right now.
import
It's actually
sector is
bouncing
only
pretty hard.
10% of the economy. So we're not
11.30
like
right
a
now.
European country where 50%
Bitcoin's still lagging
of
at
the,
75.5K.
of GDP is in the external sector. We're also, as I mentioned, we're an oil exporter, so we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone.
I was going to say, it's a long presser.
I won't see you next time.
Oh, this is sad. And he's gone, just like that. End of an era. I'll give it to him I'll give this to him. The integrity. That's what I'll remember him by, is the integrity he had while holding this position and serving out his term. Didn't back down to political pressure, went with the numbers. He might have been slow to cut rates, but he did what he thought that, the numbers were telling him to do. And that's it. He didn't listen to any pressure from outside sources, just like the Fed should. And that's all we can really ask from these guys in this position. So, bye, Jerome Powell. You'll be sorely missed. We'll see if Warsh can hold that integrity that he showed in the office, but it's going to be interesting now from now on. He'll still be there as governor, obviously, until this investigation is done, and then we get that decision from the courts, but which will be huge for the future of the economic markets. So, what a day. Bitcoin trying to fill that gap that it made ahead of the presser. It'd be nice if it retraced this move, especially for my long position. I'm down like $6,500 right now on it. It's kind of shitty, but if you're with me, I'm going to be posting my trades for this afternoon in the Telegram. It's a free link. It's in my bio on X at Red Hot Trade. If you want 10% off on Blowfin, use code RHT when you're signing up. And if you want any size prop account, trade Bitcoin with up to a $200,000 account, use code RHT there as well for a nice little discount on your sign up for any account. So thanks for coming today, guys. I'll probably do another live trading. I'll do a live trading, like a purely live trading session tomorrow morning for New York Open. See how things react to the big earnings announcements today. We have Meta, Google, Amazon, and Microsoft reporting after the bell. So huge. It's like $13 trillion worth of market cap. That's going to be reporting after the bell. So should be super interesting how that all plays out. I'm pretty bullish on Google and Microsoft going into this. Amazon and Meta, I'm going to kind of stay away from. But yeah, thank you for the support as always, guys. Go join the free Telegram and